Good morning, ladies and gentlemen. Happy 4th of July, 2022. This is Lord ECONOMIST Reese Hart. You're watching CORP Exchange Television. And this is a report from the RAVIN Index. It's also an Economist Corner segment. So what we're doing is we're being, people would ask me, what does OWLISH mean? You know, the uncle comes in and they talk about hawkish and dovish and pigeonish, and they say hawkish, dovish, and what's the other one? Well, CORP Exchange here, what we do in our Economist Corner, we have OWLISH. OWLISH is being not pessimistic, not optimistic, but being aware, more aware of the investment environment. You know, focusing on what's happening versus trying to just take everything on and make a decision to say, oh, the market's gonna float up, oh, the market's gonna glide. You know, OWLISH is more wisdom, more experienced in the market. Like, okay, like for instance, again, this is Lord ECONOMIST Reese Hart. You're watching CORP Exchange Television. And this is a RAVIN index thing because we got some commodity stuff, some good stuff to get to. But a question was posed to me, so I threw in this economics corner deal. Because we're able to do that now. We have the backing to do stuff like that. So, excuse me. So you're looking at the OWLISH, and for example, I come to you and I say, I have these insurance products and, I'm trying to sell you life insurance, but you already have life insurance. You see what I'm saying? So I'm pitching my game to you and you're just sitting there listening, or you may not even listen because you're aware of what's going on in the market. You're comfortable making your little percentage or whatever, you and your camp, you're comfortable, or your business partners or your family, you understand where you're going with your investment, and you're not willing to let somebody just come and change your mind because the market's going this way, or you understand that these days, 2025 and moving forward, investment decisions are sporadic. Things just happen. You really can't predict what's going to happen. So you're very owlish on the market, so you don't get caught up in the knee-jerk reaction and over leverage things or make a decision. There's a number of reasons why you would have an owlish outlook on the market. You could look at through the politics. You could say, well, there's liberal things going on. There's a lot of reform and a lot of clamping down on certain things. So that would make the opposition to those things like financial reform. If the liberals are in control, the financial reform, the conservatives would make a stronger push to push back. So you would probably not see so much reform happening right away. Then they would have to turn around and cram it down your throat. So you would be owlish on financial reform. You would say, well, I'm owlish on that. So I would say, okay, I'm owlish on that. So what would be important to me is, what's the stress of the banks? Measure to how is China floating their currency? You would think a little more slower. You would think you would take your time. That's pretty much what owlish, when I say we have an owlish outlook, or a company gives an owlish outlook, because the owl is wise. He sits there and he'll watch the rat for 3 days, and then he'll just go and grab him when he feels like it. He'll study it and make sure that he's really smart. So we say owlish, and he's a predator. And investments, you have to be a predator. You're not going to be the prey in investments. You got these gurus, they come on TV, they're selling you, oh, the robots are trading against you, or the institutional investors they're turning you into the prey. So they're definitely not owlish on the market. But then again, they're selling the business. So to be owlish on the market, you have to be more in control and focused and wait for the decisions or wait for whatever's going to transpire, and then you make your decisions based on that. So to get to the RAVIN index, another question was posed on me, what do we think about risk on trade versus risk off trade? You also have ETNs, which we're trying to develop some products. We call them lashes, and versus the exchange traded notes. Everything comes back to commodities. That's what a guy that showed me what commodities was about. But we say goods, because when people when you say commodities, people automatically say, oh, stock market talk, AES, SP, and S&P, and Dow Jones, and treasuries, and oil, earth's blood. So we say goods, because there's a lot more commodities out there that don't fall under what is a commodity. So we say goods. There's a lot of goods, butter, cheese, clothing, cloth, anything that a human being needs to survive on the planet or to be comfortable, really just survival, because you need clothes in cold weather. You need shoes, you need those kind of materials. You need food, you need fresh air, you need fresh water. These are goods, commodities, commodities goods. So, in a risk on, risk off trade, the way I perceive it is, it provides long exposure to daily performance, and this is linked to goods, equities, currencies, and even sovereign bonds. The lashes, which is your exchange traded note, what we call the lashes, it has correlated values, and they are expected to rise when the outlook of specific markets and the broader economy is positive, and they ultimately decrease when these the markets and the economy perform negative. So the value is very important of the lashes, because it goes up, and this is your risk on, risk off trade. There's a lot of things that are out there, a lot of products and instruments that are out there that people don't use. They may be aware of it, but it doesn't give you the action, but it gives you that owlish perception of the market. You see, like if for instance, we'll bring in a life insurance policy. You bring in these kind of policies versus, I have $100,000 I saved up. I want to put that in the market. The market's sporadic and volatile. Anything could happen. War is imminent. Inflation is on the rise. Taxes are going up, so you have to pay more taxes on your positions and stuff like that. And the services are getting higher. So if you need a consultant or you need a tax person, those prices are going up. So the ability to implement a comprehensive, quote, risk off, unquote, through the purchase of the daily shorts, the lashes, which we like the inverses of those, is correlated between asset classes and investments that have risen or continue to rise. The purchase of the lashes gives the investor the opportunity to take advantage of an economy growing correctly in a straightforward manner. Plain and simple, if the market is choppy or if your markets are going sideways, don't participate in this form of investments. I would even stay away from the goods. CORP lashes are a mix of long and short positions in various asset classes regarding diversified investment portfolio construction. Incoming positions may be deferred to CORP repair strategy controls. Managing risk indulges the investor and affords the manager of the CORP company in question to create investment bonuses which increase investment cash profits. again, agriculture, metals, domestic and foreign government bonds are very popular with CORP exchange lashes, which kind of gives you an idea of where we stand on the risk on, risk off trade, and the OWLISH look on investments, and how you approach that those situations. Lord Ibo Risi Hards again. Happy 4th of July, everybody, from Lord Ibo Risi Hards and CORP Exchange. CORP Exchange Television, and you were just involved in a RAVIN index risk off, risk on trade, and also you were taking part in a Economist Corner OWLISH. Define OWLISH. Thank you and have a very blessed day. Goodbye.